Welcome back to Tech Unboxed, the podcast where we make sense of the tech world's wildest headlines. I'm Jenny, and I'm still trying to process some of the numbers Mark's about to lay on us.
And I'm Mark, and today, Jenny, we are diving deep into something that, well, it certainly got my attention when I first saw the data. We're talking about NVIDIA, GPUs, and a market dominance so profound it almost feels like, well, like they're playing a different game entirely.
A different game is right. Q2 2025, Mark. NVIDIA cornered 94% of the discrete GPU market. 94%! That's not just winning. That's like every other player packed up their toys, went home, and maybe even sold their company to NVIDIA. How does a company even achieve that kind of market share?
That's the big question, isn't it? And it's not a simple, straightforward answer. It's a compelling mix of clever strategic execution, quite a bit of external market chaos, and, frankly, some pretty significant missteps from the competition. So get this. For Q2 2025, NVIDIA shipped a staggering 10.9 million units.
Against AMD's 0.7 million. Just 700,000. Mark, the disparity there is, it's just mind-boggling.
It really is. And Intel? Their share was so small it barely registered on the charts. John Petty Research, a firm I really respect for their insights into these numbers, pretty much indicated they didn't even bother charting it separately for Intel because it was so negligible.
Ouch. That has to sting for Intel, especially after all their big Arc GPU launches. But, okay, 94%. That's the headline. What's the real story behind it, Mark? What caused this massive surge?
Here's where it truly gets interesting. And a little wild, honestly. A huge portion of this Q2 surge, which was a 27% increase quarterly, was driven by something we're calling tariff panic buying.
Tariff panic buying? So like people rushing out to buy graphics cards because they thought they'd get more expensive because of import taxes?
Precisely. The U.S. government started floating the idea of significant import taxes. We're talking up to 25% on semiconductors. And, consumers and retailers alike saw the writing on the wall. They started front-loading purchases, trying to get ahead of those potential price hikes. Dr. John Petty himself said, and I'm quoting him here, "We think it is a continuation of higher prices expected due to tariffs and buyers trying to get ahead of that."
So people were just buying GPUs out of fear to avoid a future price increase. That's a unique market driver, and it sounds like NVIDIA was just in the right place at the right time with the right inventory, you know?
More than just the right inventory, Jenny. They had the right product timing. While AMD and Intel had their big Gen 5 GPU launches in Q1, NVIDIA extended their value models, like, say, an RTX 5070, into Q2 and Q3. These cards, offering solid performance boosts around the $500 mark, suddenly became incredibly appealing for people looking to upgrade before tariffs hit. One Reddit user put it perfectly. "People like me who last upgraded before or during the pandemic era and have RTX 2000 and 3000 series cards, which are now badly showing their age, now have access to $500 area cards, like the 5070, which are potentially twice as fast. Great time to upgrade."
Okay, so this highlights an upgrade frenzy, right? You mentioned something about an attach rate earlier, which sounds like something from a retro video game, but I'm guessing it's actually super important here.
It is. The attach rate, for listeners, is simply the ratio of discrete GPUs shipped per CPU sold. Typically, it hovers around 100%, so roughly one GPU for every new PC built. But in Q2 2025, for discrete GPUs, it shot up to an astounding 154%. That means for every CPU, more than 1.5 discrete GPUs were sold. A significant portion of those GPUs weren't for brand new builds. They were upgrades. That's a massive wave of people replacing their older cards, probably those pandemic-era purchases they made a few years back, now feeling a bit long in the tooth.
So people were upgrading their existing systems, not necessarily building whole new ones. That's a key distinction. It wasn't organic growth from new PC sales. It was reactive growth from tariff fears and a desire for better performance before prices went up. But what about the competition during all this? AMD and Intel seem to just kinda disappear quietly.
They truly did. Let's start with AMD. Despite NVIDIA facing shortages from this massive demand, AMD only managed to capture 6% of the market. Why? Well, their RX 7600 series, launched earlier in Q1, just couldn't compete effectively. Users complained about insufficient VRAM, lackluster ray tracing performance, and driver instability. Even at seemingly competitive price points, people just weren't buying. One user on Reddit observed, and I quote, "The 3050 outsold the 6600 by boatloads. And that's an older NVIDIA card. It highlights a clear preference, even for prior-gen NVIDIA."
That's a pretty scathing critique, yeah. And Intel? Their Arc GPUs were supposed to be a big disruptor, a real contender, right?
Oh, Intel. They launched their General 5 GPUs in December 2024, actually a few months before NVIDIA and AMD's full General 5 lineup materialized. They had the first-mover advantage, but it just backfired spectacularly. Driver instability was a pervasive issue, causing frequent game crashes, which, is a deal-breaker for most gamers. And worse, there were widespread reports, again from user communities, of what they called faulty powertrains, leading to actual hardware failures. One user quipped, "I'm quite surprised that they don't get sued for manufacturing malfunctions. Their powertrain is obviously faulty. When you combine that with a lack of a strong, established ecosystem like NVIDIA's CUDA, they just couldn't make a dent. They had the opportunity, but the execution just wasn't there."
So NVIDIA had the right products at the right time, capitalized on tariff fears, and their competitors either stumbled significantly or delivered subpar products. It really was this perfect storm, as you said. But you also hinted that this dominance might be a pucka, temporary blip. What makes this growth so, unsustainable to some?
That's the crucial point, Jenny. Dr. John Petty explicitly called this surge a temporary blip, which is, a pretty strong statement from a reputable analyst. His research projects a 5.4% decline in the GPU market between 2024 and 2028. This kind of explosive growth isn't sustainable for a few key reasons. First, that tariff panic will eventually normalize. Once the tariffs are either firmly in place or the threat completely subsides, that immediate rush to buy will disappear. Second, there are structural headwinds. We're seeing a trend where more powerful integrated GPUs, think AMD's Strix Halo chips, are getting much, much better, which could really eat into the lower to mid-range discrete GPU market. Why buy a separate card if your CPU can handle it? And third, the continued rise of cloud gaming could mean fewer people feel the need to own powerful discrete graphics cards at all. If you can stream AAA games seamlessly, the need for local processing power diminishes.
So the party's winding down, potentially. Where does that leave NVIDIA then? If the gaming market is projected to shrink, what's their next big move to maintain this kind of momentum and profitability?
That's where their AI and data center segments become paramount. This is where NVIDIA's long-term play really shines. The gaming market might contract, but demand for GPUs in AI, machine learning, and data centers is just soaring. NVIDIA's CUDA ecosystem has given them a near monopoly in that space, effectively, and their AI-focused Blackwell platform is what Jensen Huang, their CEO, calls a generational leap. They are actively pivoting to make AI their new growth engine, smartly offsetting any potential decline from the gaming side. Their Q2 fiscal 2026 earnings, a staggering 88% of their revenue that quarter came from AI GPUs and data centers. That's not just a shift, that's an enormous, fundamental reorientation of their business model.
88%. Wow. That really puts the gaming GPU market in perspective for them, doesn't it? Still important, it's still, their origin story in many ways, but AI is clearly their future. So the secret to NVIDIA's success isn't just about making great gaming GPUs today, but about playing the long game with AI and really smart strategic market positioning. It's almost like they saw this coming years ago.
Exactly. They capitalized beautifully on a unique market moment in Q2 2025. But their true genius lies in constantly adapting and proactively pivoting to the next big wave in computing. It's about technological leadership, impeccable strategic timing, and a deep understanding of impending market shifts. But, they also need to address those lingering quality concerns that some users voice. And the future market is projected for decline in gaming, so it's not without its challenges. They can't just rest on their laurels.
That's an excellent point. And on that note of constant evolution and adaptation, we'll wrap up this week's episode of Tech Unboxed. Mark, this was a compelling, deep dive into how NVIDIA climbed to such heights, even if it's on a market that, shall we say, has some shifting sands beneath it right now.
Always a pleasure, Jenny. It's a fascinating look at how external events, combined with internal strategy, can dramatically reshape an entire industry, even if only for a season.
That's all for us this week. Join us next time for more tech insights, demystified. I'm Jenny.
And I'm Mark. Stay curious, everyone.